First of all, I'm really thankful that you have accepted my request. And yes, from our trading community, especially from Indian, really thankful because like your experience and your inspiration talks that really matters in India. So I'm really thankful to
Excellent.
you for accepting my request. Thank you very much.
Thank you. Thank you for having me on.
Wonderful, wonderful. So before we proceed, well, I wanted to know that first of all, how did you celebrated your birthday?
Oh, we had a party at the house. My wife planned a surprise party. So we had a lot of the family come over. We went outside by the swimming pool and we had about a 2-day party.
Oh, great, 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 great.
Yeah.
Wonderful, 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 great, wonderful. So with your
Thank you.
permission, if you give me permission, so shall we start?
Yes, absolutely.
Wonderful, wonderful. So, sir, uh, uh, let's start. So, can you please tell us about your background and how you got started in the world of trading and investing?
Sure. And thank you for having me on. I really appreciate it. And my journey goes back over 40 years now because my family was in the stock business. My mother was in the business. A couple other family friends, very close. My mentor. So after school, I used to go to the local stock brokerage office. It was Shearson, Hayden, Stone, and this was back in maybe 1980, 1981. So I used to spend some time at the stock brokerage firm, and I just got interested. I would see the stockbrokers. They had fancy cars, they had nice suits, they had big offices, and it just seemed like they were having a lot of fun. So that started when I was maybe 10, 11, 12 years old. And then as a teenager, I started to read books about the stock market at a very young age. So it goes back over 40 years for me.
Wow, that's wonderful. Great. Wonderful. So, at the time of playing video games or go to any outdoor games, you have invested yourself into the market, right? For learning purpose.
For learning purposes, I didn't really start to invest or trade until I actually had a little bit of money. So I started to get interested. I was probably, I'd say it was 1996, 1997. I started to pick up the Investor's Business Daily newspaper, but I didn't really know anything whatsoever other than what I had read in some books. But I really, 1996, 1997, I really started to get into it.
Wow, that's wonderful. Great, great. Well, wonderful. Good to know that. Okay, let's move on to the next question. What led you to establish the blue chip daily trend report and what is the main objective?
That's a great question. So Blue Chip Daily is a passion of mine. So I'm passionate about the stock markets. It's something I've got Bloomberg on in my office about 24 hours a day. And it's a never ending desire for me. I'm fascinated by the financial markets, stocks, commodities, just the financial markets overall. So I joined Twitter about 10 years ago. And it's an interesting story. And I'll just spend a minute with you on it. So it really started for me on Facebook, maybe 15 years ago. And I was friends with an author named Michael Covell on Facebook, and I'm sure you know of him from Trend Following.
Yes, yes.
And I saw Tom Basso, who's a very well-known trader. We all know Tom, phenomenal guy. And I saw him on Facebook, and this was probably 2010, 2011, if I had to guess. And I sent Tom a message because I read Van Tharp's books. I recognized Tom's name, and I didn't know any better. I said, it's Tom, let me just send him a message. So I sent Tom Basso a message. He responded to me. I was very surprised. He responded to me, and we started an interesting little conversation about trading. And I had, one or two questions for him. He was very, very hospitable with his time. And then long story short, I moved over to Twitter 2013. I didn't know anything. I had, maybe 2 followers, but I enjoyed the platform because I could post ideas, and it was really a journal for myself. I could post my idea, look back at it in a month or two. And over time, my following started to build. And I had a lot of requests from people for me to write a book, for me to start a website, for me to do education. And I looked at all the alternatives, and I decided to start the website. And when I started the website, I said to my wife, I said, probably nobody's going to join. It's not going to make any money, but I'm going to do it anyway because it's going to be fun. And it's been good. We have a very, very diverse community of members, and I share a lot of ideas there, educational, and I really like it. It's really been a lot of fun so far.
Wow, that's good. Wonderful. Good to hear that. But yes, my ultimate question, which I ask to every guest, what is your strength and weakness in the trading field?
My strengths would be I've got a very simple process that I follow.
Wow.
So I know what I'm good at, and I know what I'm bad at. So we'll start with what I'm bad at. I'm bad at short-term trading.
Okay.
I'm bad at looking at a news headline and trying to figure out what the markets are going to do from that. And those just aren't things that I'm comfortable with. What I am comfortable with is I like to make money when I'm right. So if I have an idea, whether it's NVIDIA, Facebook, Home Depot, whatever it is, if I get an idea and I'm right, I would like to make a lot of money. So I don't want to buy a stock, it goes up $2 or $3, and then sell it, and then have to start over again, find another stock, buy another stock. So probably my biggest strength is that I understand who I am.
Okay.
I'm not a day trader. I'm not a swing trader. I'm not a predictor. So once I know that I'm not a good short seller, what I'm good at finding very good entry points on stocks. So that's what I focus on. And then I try to trade less often, not more often. So I would rather buy one stock and have it go up 20, 30, 40% over time than try to buy 10 stocks and they go up 2 or 3% and then sell. So I'm not a short-term trader.
Okay, great. So I can say trend is your friend until it's bad, right?
Yes. And it has pluses and it has minuses that people need to understand. So if I'm buying a stock and I'm looking for the big move, 20, 30, 40, 50, maybe more percent, sometimes it can take a long time for that to happen. 2 months, 3 months, 4 months. But losing trades can happen right away. So with trend following, sometimes we have immediate pain and long-term gain. And that can be difficult. You know, if you take a small loss and a small loss and a small loss, and you're waiting for that big payoff, it can be difficult psychologically sometimes.
Very true. I completely agree with you. Wonderful. Good to hear that. Okay, so let's move on to our next question. That is, could you please share some insights into your experience as an advisor with Merrill Lynch and how it shaped your approach to trading and investing?
It was invaluable. So I was with Merrill Lynch from 1998 until 2003. And when I got into the market, I was a genius because the market was going straight up. It didn't matter what we bought, it went straight up. But then in 2000, the top came in, the NASDAQ dropped, I think it was 80% over 3 years.
Yes.
And I learned how to lose money in a variety of ways.
Okay.
So I made a lot of mistakes. And I had Cisco, I had Nortel Networks, Sun Microsystems, the best companies at the time, and they all went down from 80 to 100%. So what I learned at Merrill Lynch from dealing with people is I learned that investors, we tend to be our own biggest enemy. Because when everything looks good, we want to buy everything. And what I found is people tend to throw in the towel at the very bottom. So when the markets were good, I saw people, take out second mortgages on their house to go into the stock market. Seriously. And then at the bottom, they said, I'm never getting into the stock market ever again. And then the markets, went up 400%. So what I learned from those 5 years was I learned to try to not let my emotions get like a roller coaster and try to take everything in stride. And when everything looks good, always stay a little bit cautious. And when everything looks bad, always look for the opportunities.
Wow, that's wonderful. Great. Good to hear that. Definitely. Okay. Now, as you mentioned, I have a next question with the Twitter. Being named one of the top 50 Twitter accounts for investor to follow and one of the most helpful traders on Twitter. How do you feel about the recognition and how has it impacted your work?
Very honored. Yeah, I was very honored to get that recognition. And what it really reinforced for me is that people are looking for knowledge. So I would consider myself very knowledgeable about trading and investing.
Wow.
But I'm not very knowledgeable about most things. So what I try to do is share with people what I think can really help them learn and develop.
Wow, that's wonderful. Good to hear that. Good. Let's move on to our next question. Can you describe your approach to identifying stock and ETF ideas and what factors you consider when evaluating them?
Yes. So the first thing that I look for, I keep it simple. So I focus on price and I focus on trend.
Okay.
And I do that with moving averages. So when I'm looking for stocks to invest in or ETFs to invest in, the first thing that I look for is uptrends. So when I run a screener, I look for stocks that are trading over the 50-day moving average and over the 200-day moving average. That's the first thing that I look for. Then I'll look for the 20-day moving average. I'll look at relative strength. But basically what I'm looking for is strong stocks and strong uptrends. And then I'm looking for a good entry point because not all stocks, even strong stocks, are a good buy at every time. So when I do my selection, I say, okay, what stocks are high relative strength uptrends? And then I narrow it down to look for a good entry point.
Great. So basically, you try to find out using the price. So you never study fundamental, right? No fundamental, only price, moving average, and few of the indicators.
Very, very little, very
Okay.
little.
Okay.
So it's always the charts. So the fun, but if the chart is good, then I'll take a look at sales growth and I'll take a look at earnings growth. And if the fundamentals and the chart both are good, that's great. But
Great.
it's always the chart is probably 98% of what I do.
Great, great. Wonderful. Good to know that. But yes, nowadays AI is booming. So can you please give us an example where you have used AI to find out the trend and you have picked up a right stock for a longer trend?
Right. So AI, I'm as you know, I'm a big believer in AI, and I've been posting about it on Twitter for the past few months now. So I personally don't know how to use Chat GPT too much. So I have it on my phone. I think it just came out a week ago for the iPhone. So I have it on my phone. I've used it for very basic things. It tells me who the best football player, but I think that this is the next big home run, major theme that we're going to be talking about for the next 5, 10, 15 years. So Stanley Druckenmiller, we all know Stan Druckenmiller. He's my personal hero. And he came out a few weeks ago and he's been pretty bearish. He's been pretty bearish on the stock market. But he said a few weeks ago that he thinks that AI will be as important to technology as the internet. So think about that. Think about that. And I agree, because the difference with AI, now keep in mind, artificial intelligence has been around since 1956.
Yeah.
In 1956, at a conference in Dartmouth, they coined the term artificial intelligence. So it's nothing new. It's been around forever.
Yes.
But Chat GPT, which is called generative AI, was released in November of 2022. So while AI is 70 years old, this Chat GTP or GPT is 7 months old. They reached 100 million users in 2 months.
Yes.
It took Facebook and Twitter, I think, 6 or 7 years to get 100 million. So I think that we are the first inning, the very first inning. And I think there's going to be a tremendous amount of money to be made. Now, keep in mind, they're not going to go straight up. There's going to be, some of these stocks were up 40% last week. I think Marvell was up 40%, NVIDIA 24%, AMD. There are going to be some pullbacks along the way in these stocks, 10, 20, maybe 30%. So it's not like we can just close our eyes, put all of our money in AI and forget about it. But I think that the longer term opportunity is just getting started.
Wonderful. Yeah, even I do believe that AI has a significant role in coming future. Wonderful. Good to know that. Okay. So could you please tell me, how do you stay updated and informed about market trends and changes in the financial landscape?
Good question. So I watch Bloomberg all day. It's just on in my office all day. I do get a lot of information from Bloomberg. Twitter, I think, is a very good resource. And then really the key thing, I just look at the charts. The charts really tell me what I should be looking for. But I would say Bloomberg, I read Barron's online. I take a look at IBD, Investors Business Daily. IBD is where I get most of my ideas from.
Wow, that's wonderful. Good to hear that. Okay. So, in your opinion, what are the some common mistakes or pitfalls that traders and investors should avoid?
Great question. Overtrading. Most people overtrade. Most people rely too much on other people's opinions.
Very true.
It doesn't matter what I think. It doesn't matter what anyone thinks, but people tend to overtrade. They tend to rely too much on what CNBC says or the Twitter person that has 200,000 followers. They rely too much on predictions. The stock market is very, very difficult to predict. And the last biggest mistake that I see them make is when the market is up, they think the market's going to go up every day forever, and they get very, very excited. But then when the market goes down, they think that it's going to go down forever and they want to sell everything. So probably the biggest mistakes, over trading and getting too emotional.
Wonderful. Good. Yes, that's true. Even I do agree with your points. Okay. So my next question, how do you manage your emotions and maintain a disciplined mindset while navigating the ups and downs in the market?
Good question. It's taken a long time. It's an everyday challenge because we are human, and it doesn't matter if you've been in the markets 20 years, 30 years, 40 years, emotions always come into play. So what I try to do is use numbers as much as I can. So I'm very careful about my position sizing. I'm very careful about my stop losses. I always know at any one time, if every position that I have gets stopped out, how much am I going to lose?
Okay.
So the first thing that I do is I focus at any one time, how much money can I lose? And that's the first thing that I focus on. So right now I've got, in technology, I've got 2 AI stocks. I have NVIDIA and I have Meta. I also have the Triple Q and I have XLK Technology ETF. It's very tempting. So I have 4 technology positions. It's very tempting when you see everything go up to want to buy 10, 15, 20 technology positions. But what I know is while they all might go up together, they all go down together.
Yes.
So what I want to do is I want to participate on the upside, but I don't want to be greedy because I know there's going to be a pullback at some time. It could be tomorrow, It could be next week, it could be next month. So I don't want to have everything go down at one time. So I wait, but I use my percentages.
Great. So you have mentioned greedy. So I have a next question with greedy. Can you share any specific strategies or techniques you use to overcome fear or greed in your trading decisions?
Yes. So to go back to my percentages, what I do, I look at the S&P 500. So the S&P 500 right now is 26% in technology. So if I'm very bullish on technology, maybe I want to have 30 or 35% in technology, but I don't want to have 100% in technology. So I look at the market and I say, okay, if I want to beat the market, the way that I think that you beat the market over time, not tomorrow, not next week, but over time, is I want to own the better parts of the market, and I want to not own the bad parts of the market. So to avoid FOMO and greed and all of that, I look at the S&P 500, and if I really like a sector, I'll buy more. Okay. But I don't want to, be 100% in technology.
So basically, you diversify your portfolio, right?
Not so much. So I have a lot of cash right now.
Okay.
And the reason is, if we look at the S&P 500 right now, there's maybe 3 or 4 sectors that look good. Technology, communication and services, maybe consumer discretionary, right? And recently healthcare, but healthcare pulled back. But when I look at the S&P 500, energy looks bad, financials look bad, real estate, utilities. So instead of diversifying just to diversify, I'll often hold cash. So if I like technology and consumer discretionary, maybe I'll put 30 or 40%, 50% in those two. But if I don't like energy, I'm not going to buy any energy stocks. So right now I have no energy, I have no bank stocks, I have no real estate stocks. So I'll diversify into good ideas, but I won't buy any of the ideas I don't like.
Wow, that's wonderful. And even that's wonderful. Okay, so let's talk about some bad things. How do you handle losses or setbacks, and what mindset do you adopt to bounce back from them?
That's a good question. So the first thing I do, I use stop losses as soon as I go in. So when I buy a stock, I assume that I'm going to get stopped out of it. So I have let's say hypothetical 10% stop loss. I'll put in my stop loss. If it gets hit, and I move on. We're going to go through. I went through a rough patch the fourth quarter of last year, because I got a lot of buy signals in August.
Okay.
And then it took that move down. And then when the regional bank crisis hit this year, I had a lot of stops get hit because I had, Morgan Stanley, I had Las Vegas Sands, I had some cyclicals that when the regional banks went down, my stops got hit. But the positions were very small, like a third to a half of my normal position. But when I have a lot of stops get hit, I do much less. I trade much less. I go smaller. But then in March, when the regional banks went down, I really started to buy a lot of technology. Triple Q, AMD, Facebook. And now those positions have been big winners. Okay. So as my positions start to work better and my trading is better, I add more.
Okay.
But when I have a bunch of stops get hit, then I really slow down what I'm doing.
Great. So as you mentioned, slow down. Now I have a very good question, interesting question. Can you discuss the importance of patience in trading and investing and how you cultivate it?
It's the most important aspect of investing and trading. And it's also one of the most difficult points because, like I said, when everything is going up, we want to buy everything. But I think that we have to objectively look at some of these charts, and we can go into some charts in a few minutes because I brought some charts with me. But I think we have to know when is a good time to buy and when is a good time to wait. And when I look at the charts tell me that. So, for example, AMD, I've had AMD on my radar screen for the past 20 points. But I had Nvidia, and I held Nvidia into earnings, and I didn't want to have Nvidia and AMD, and they both go down. So patience is the most important. So I did a lot of buying in April and the beginning of May. But for the past few weeks, I haven't really been buying anything. And it takes time to know when to, put the pedal to the metal and when to sit and wait. And right now I'm waiting because a lot of these charts are extended past where I want to buy them.
Okay. So ultimate, I can say patience is the key to success, right?
Yes. Patience and discipline.
Wonderful, wonderful. Okay. So as you mentioned that you have a very big community. So have you noticed any common psychological pattern or biases among traders and investors? And how do you address them into your approach, into your own approach?
The good question, and what we talked about earlier, I've noticed that for the most part, people tend to get overly emotional.
Okay.
So what I want to do, I want to maintain an even keel. So if I'm having a really good day or a really good week or a really good month, that's great. But I don't want to change my approach. And when I'm having a bad day or a bad week or a bad month, I don't want to change my approach either, because I know that over time, the markets are up and down, but I don't want my emotions to go with the market. I want to stay even as much as I can, and then just wait until me and the markets are in the same wave.
Great, great, great. So what resources or practice do you recommend for traders and investors to enhance their emotional intelligence and mindset?
First thing they should do is join my website.
Wow. Yeah.
Because I share on a daily basis. Not only do I share alerts and, I like this, I don't like that, but I share the mindset.
Yes.
And I think that everyone should have a mentor. So I don't do any personal mentoring whatsoever.
Okay.
But I do share every day my mindset, what I'm seeing, my trend approach. The other thing is, though, and that was a little commercial, but the other thing, but I do believe it 100%, when I first started in 98, I wish that I had a website, whether it's mine or somebody else that you like, that you believe in, that I could just, pick their, hear what they're thinking on a daily basis. The other thing is to read good books. Jesse Livermore, William O'Neill, Van Tharp, The Market Wizards.
Yes.
Read those books. Oh, Stan Weinstein.
Yeah.
Stan Weinstein he's one of the best. But they should also tune out about 95. There it is. They should tune out about 95% of what they hear on Twitter and CNBC. Forget about what everybody thinks. Figure out who you are.
Very true.
Figure out what is your time frame. And then teach yourself how to focus on the price charts, because whatever the market is doing at any given time is the right thing. So let's say you and I are sitting here and I think that Square, the stock Square, right? It's been bad. Maybe I think Square is a $300 stock. The market thinks it's a $50 stock. Guess who's right? The market.
Yes, market.
So And I don't think Square is a $300 stock. I was just using an example. So what I would say is learn how to understand that whatever is happening in the market at the time is the right thing. And don't fight the market. Don't try to beat the market, but instead get on the right side of the market and then try to outperform. You see, you can outperform the market. It's very hard to beat the market.
Yes.
And when people think about beating the market, they think, okay, the market's here, but it's wrong. It's not. Get on the right side and then figure out how to capitalize.
Very true. Well said. Well said. Okay, so now we are talking about the market. So my next question is related to the market. What are your thoughts on current state of the financial market, and do you see any significant trend or opportunity emerging?
Yes. So right now the S&P 500 is very choppy. Okay. There's no clear trend. I think that tech stocks are better. I think the NASDAQ 100 is better. I think there's a lot of parts in the S&P 500 that are very weak. Financials, energy, steel, basic materials. So if you own the S&P 500, you own the good and the bad. So what I want to do is find the good and avoid the bad. Okay. And right now, for me, the NASDAQ 100, Microsoft, NVIDIA, Apple, Google, Facebook. Listen, those stocks are working. We don't need to reinvent the wheel. If that's working, that's what I want to own. If energy is working, I want to own energy. But what I see right now, I think tech is the stronger market overall, and that's where my focus is.
Okay, great, wonderful. So when okay, so when we are talking about the market, let's talk about the volatility. How do you handle market volatility and uncertainty, and what steps do you take to mitigate potential risk during turbulent times?
Okay, so the first thing is expect volatility every single day.
Okay.
Don't ever get complacent. Don't ever think, the worst is behind us. It's all clear. People get complacent, and we can't get complacent. So the first thing, I lost you there for a second. There we go. The first thing is every single day, I expect the market's going to go down. I expect it's going to pull back. I expect there's going to be some bad news. Jerome Powell's going to say something we don't like. Inflation's going to be high. So the best way to deal with volatility is to expect it every single day. Okay. If you are a boxer, right? If you're a professional boxer, you should expect to get punched in the face every single time you fight. So the stock market is no different. Every day I go in, I expect volatility. I expect pullbacks. I expect my positions are going to pull back, but I use stop losses. I bought Facebook stock. I give it, let's say, a 10% stop loss. If it goes up, great. If it goes down 10%, then I sell out of it. So, but I limit how many positions I have at any one time. But by the same token, if you use stop losses, you should not let daily volatility scare you out of your positions above the stop losses. So that's what I would say. Find a system, measure your risk early, and then follow it.
Wow, that's wonderful. Good, yes, sir. It's been lovely talking to you. But yes, before closing our session, I have a last question for you. What are your future plans and goals for the Blue Chip Daily Trend Report, and how do you see your role evolving in the coming years?
Great. That's a great question. So obviously, I plan to expand over time. I think the markets that we cover are going to stay the same. But I do plan to increase the educational content. I've had a lot of requests for, to write a book or to do a video series. So what we'll probably do maybe over the next 6 months is a video on demand, education on demand. And I've got this in the process right now, but some people want to focus on, entry methods, like you said.
Yes.
Some people need help on risk management. Some people need help on knowing when to sell. Yes. So where I see the website going is I think that we'll add more educational content over the next 6 months to a year.
Wow, that's wonderful. Great to hear that. So you are going to add more values in our community. That's really wonderful. Good to know that. But sir, yes, before this was my last question. Okay. So what advice would you give to someone who is just starting their journey in trading and investing?
That's a great question. So a couple things. Trade much less, trade much smaller, learn more, and do less. So here's what happens. And I did this myself personally, and I blew up a couple of accounts like everybody has. But so if I'm a new trader today or a new investor today, and I like AI, I don't need to go buy 10 AI stocks and buy options and put all my money in there and get greedy. New traders and investors tend to be and I did it too, overly ambitious. They think they're going to get rich overnight. You very seldom, as a new trader or investor, will get rich overnight, but you can go broke overnight. Yes. So what I would say, if you like, we'll say anything. Let's say you like oil stocks. If you like oil stocks, you don't need to buy 10 oil stocks tomorrow. You can buy one, right? Yes. Buy one. And if it works, then, you can figure it out, take some profits, maybe out a little bit more, but you don't need to buy 10. And guess what? If you buy one oil stock and it goes down, don't buy more on the way down. Don't average down. If it hits your stop, let it go. Don't take it personally. But I would say do less of everything.
Okay.
Trade less, trade smaller, hold more cash, do everything small. And then if you're profitable over 6 months, if you're profitable over a year, then you can do a little bit more. But that's what I would say. Start slow, learn. If you are successful in the markets, you can do it for the next 40, 50, 60 years. Doesn't have to be overnight. So start small, don't go broke, and learn over time.
Great. And follow you.
And follow me.
Wonderful, Larry.
And listen, I've lost money. I've had trades that go down. I've had trades that get stopped out. We all lose money.
Yes.
The objective is when you lose money, for it to be small so you can recover. If you have guess what? You have little small losses here and there. You have some small wins here and there. But then every so often, you have the big home run. So what the objective is when you lose small, don't lose too much, move on, and then eventually you'll be there for the big home runs that really will make your year.
Wow, wonderful. Larry sir, thank you very much for giving me this much information especially for Indian communities, because We need somebody like you to guide us, especially in India. So thank you very much for joining us. And it's been really lovely talking to you. Looking forward, even in future, even we do event, you are invited by us. You have to come. Say yes.
Yes. Thank you.
Wonderful,
Thank you,
wonderful.
my friend. I
My pleasure,
appreciate
Larry
it.
sir. And yes, belated, sir. I was not able to, like belated happy birthday, sir. Enjoy your day. Enjoy your like today, memorable day.
Thank you so much. Enjoy your day, my friend.
Okay. Bye bye, sir. Bye bye. And